Onto your markets now. Asian markets appear to track the positive performance in the US on Friday, with all the indices that we follow registering increases. The Nikkei share average rose by 0.93%. The Hang Seng Index ended the session up 0.77%, while the Shanghai Composite Index inched up 0.2%. US stocks rallied sharply on Friday, this as they recovered following a turbulent week that saw the S&P 500 hit correction territory for the first time since 2023. Despite these gains, both the S&P and the Nasdaq are on track for their fourth consecutive week of losses, with the S&P 500 down over 10% from its record high just over 3 weeks ago. The Dow Jones Industrial Average rose by 1.64%. The S&P 500 increased by 2.13%, while the Nasdaq Composite Index ended the session up 2.61%. All right, in terms of our local indicators, we see that the all-share index is up in positive territory, up 0.3%. On the currency front, the rand is trading at 18.19 against the US dollar, 19.79 vis-a-vis the euro, and 23.53 against the British pound. On the commodity front, we see that gold is trading at $2,995 an ounce, platinum at $999 an ounce, while Brent crude oil is trading at $71.23 a barrel. Well, for more on the markets, we're now going to be speaking to Bastian Tekriber. He's a Chief Investment Officer at Prescient Investment Management. Thank you very much, Bastian, for joining us. So markets appear to be starting on a good note this week. Is that because they're coming from significant lows already? What's actually changed?
Thanks so much for having me on. And yeah, obviously markets are recovering a little bit today, I guess, after a tough week last week. Based on a lot of politics and a lot of political commentary from the United States, markets seem to be taking a little bit of a breather. It's a small move, so I wouldn't overrate this one-day move. But political, it's volatile, and that's what we've seen since Donald Trump took office. Yeah.
So on Friday, gold finally breached the $3,000 an ounce mark, although it's come off a little bit from that level. It's below 3,000 now. But what does that signify to you, and can this be sustained?
Yes, I guess it depends on so many factors. Obviously, as I mentioned earlier, politics play a role here. We had a lot of central banks over the long term, over the last couple of months, actually, buying more gold reserves, so to say, to diversify potentially away a little bit from the US dollar based on the measures threatened by the Trump administration. That's not the full story, though. We do think that the gold price naturally is a good hedge against potentially higher inflation, which we could see because of tariff threats, but naturally also a good hedge or good protector against any downside risks. And as you mentioned earlier in the intro, the markets have been volatile over the last couple of weeks. So with that, the gold price has enjoyed a little bit more demand, and that pushed the price up over the short.
So it seems that ratings agency Fitch made a comment on Finance Minister Enoch Godongwana's budget last week. They say that they're not optimistic that debt to GDP will stabilize at 76.2%, as stated by National Treasury. They say that they believe the figure will rise closer to 79% to GDP this year. Do you think it's going to take a little bit longer for South Africa to improve its credit rating status, given this kind of view?
We actually do disagree with Fitch's statement here. Obviously, the Treasury didn't have the best track record in terms of keeping their plans or keeping their promises when it comes to the debt trajectory. We have to give that to Fitch. Having said that, the assumptions which the finance minister made actually in his budget were quite conservative, assuming 3 consecutive years of growth rates below 2% real. That is low, that is conservative, and that's what's baked into the 76% assumption. For us to move or stabilize only at 79%, surely it's a possibility, but it's a quite pessimistic outlook, and it would require us to overshoot even more these quite conservative growth assumptions made by Treasury.
Well, we wait and see. And then lastly, on the monetary policy front, we have the Reserve Bank making a call on interest rates this Thursday. What do you think they're going to do, and why?
Most likely this is going to be a non-event, to be honest, because we're not priced for any cuts yet, which is unfortunate. We do think the economic picture and also the strength of the rand, as well as the inflationary picture, does suggest that there's room for interest rate cuts. Having said that, the Reserve Bank is known for following the Fed quite closely. The Fed hasn't really come to the party with more cuts. They've communicated more hawkishly, saying that cuts will be further out in the future. And we do think that SARB will follow them this week by not cutting its rates.
All right, Bastian, thank you so much for speaking to us today. That was Bastian Takerepa. He's the Chief Investment Officer at Prescient Investment Management. We're going to take a quick break.